Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Thursday, the 27th of November. I'm Caroline Hepker in London. Coming up today, Chancellor Rachel Reeves ramps up UK tax increases as Labour's hikes outstrip what any government has done in the UK in more than 50 years. Hong Kong's worst fire in half a century leaves dozens dead, with hundreds still missing. Plus, private capital hits a wall, why obstacles in Europe are proving to be insurmountable for some private equity firms. Let's start with a roundup of our top stories. Chancellor Rachel Reeves raised taxes on 1.7 million workers and the wealthy to pay for welfare spending and build up her fiscal headroom. It's her second tax hiking budget in a row, with levies on savings, properties worth more than £2 million and a range of other measures. Speaking after her budget proposal was announced in an exclusive Bloomberg interview, the Chancellor refused to rule out more tax hikes in future.
I took the fair and necessary choices today, but my focus has been and always will be on growing our economy so that we can keep taxes down and have the money we need to invest in our public services.
Although the Chancellor touted growth, the Office for Budget Responsibility downgraded economic growth in every remaining year of the Parliament. But investors have so far reacted positively to the UK budget, which set aside more money as a buffer against gilt market swings. So did Labour rank-and-file MPs, who were pleased to see a cap on welfare payments to families with multiple children lifted. But questions remain about whether Reeves did enough in her budget to help her and Prime Minister Keir Starmer survive. The pair are Britain's most unpopular Prime Minister and Chancellor since polls began in the 1970s. The UK government is expecting a bigger windfall from its taxes on non-domiciled residents, despite reports that many of them are leaving. The Treasury expects to take in nearly £40 billion from people who live in Britain but keep their wealth overseas. Billionaire founders like Revolut's Nick Storonsky and Checkout.com's Guillaume Pouzaz are among those who have publicly left Britain thanks to the measures. Now to Hong Kong, where the deadliest residential fire in decades has killed at least 44 people and left hundreds of others missing. An 8-tower housing block has been burning for over 20 hours, throwing fresh scrutiny on the city's housing standards. Our China correspondent Min Min Lo says a number of issues could have caused the blaze.
The crux of the issue is what exactly caused this fire, and authorities are still finding that out, but they did say that the spread of the fire was much faster and quicker than usual. This is a very old estate, over 40 years old, and it was undergoing heavy renovations. There were bamboo scaffoldings, green mesh surrounding the buildings, and authorities said some of the buildings were not up to compliance standards.
Bloomberg's Min Min Lo speaking there. Rescue operations are expected to stretch into this evening, more than 24 hours after the blaze started. Chinese President Xi Jinping has urged all-out efforts to reduce casualties. Now, global equities were close to erasing their November losses as rising bets for Federal Reserve interest rate cuts have revived markets. The MSCI All-Country World Index climbing for a fifth straight session, cutting its November drop to just 0.5%. The moves track increased confidence for Fed rate reductions, with money markets pricing in a roughly 80% chance of a quarter-point rate cut next month and 3 more by the end of 2026 from the US. The moves come as the Beige Book survey of regional businesses showed that employment declined slightly and prices rose moderately, with economic activity little changed in recent weeks. 2 members of the US National Guard are in critical condition after being shot near the White House. The suspect was also shot before being taken into custody by other Guard members and Washington, D.C. police. Authorities say the suspect is a 29-year-old Afghan national. A short time after his nationality was released, the US government said that, quote, effective immediately, the country has stopped processing immigration requests from Afghan nationals. President Donald Trump has been reacting to the events.
This heinous assault was an act of evil, an act of hatred, and an act of terror. It was a crime against our entire nation. It was a crime against humanity. The hearts of all Americans tonight are with those two members of the West Virginia National Guard and their families.
That was the president speaking. He also ordered an additional 500 National Guard troops to Washington following the shooting. Those are some of our top stories for you this morning. Let's bring you up to speed with the markets right now. So we have no cash treasuries trading, of course, because of the Thanksgiving Day holiday. Hope you're having a good day if it's beginning for you. In terms of the MSCI Asia Pacific Index, up by 0.4%. Asia equities gaining for a fourth day in a row. The pound yesterday climbed above $1.32. Positive reaction from some investors to the budget. Gilts also rallied. 30-year gilt yields fell by 12 basis points. This morning, the dollar is down by 0.1% and oil prices are dropping 0.5%, with gold down 0.3 too. So those are the markets. In a moment, we will bring you the latest on the UK budget, as well as the challenges facing private equity in the European insurance space. So we'll get to that. But this has caught my eye today. The US Transport Secretary, Sean Duffy, is calling for more civility in the skies. But as Bloomberg's Liane Al-Rashdan has been writing, what he really means is don't wear pyjamas in public. However, as she points out, what if your PJs are actually the kind of first-class swag that are provided by a lot of airlines? Well, Duffy's request has set off this huge public debate that got my attention today. I mean, where angels fear to tread is what I think. Reporters this week were told by Duffy, let's try not to wear slippers and pyjamas as we come into the airport. The Trump administration has been strangely focused on sort of looking the part, and Duffy has pledged to revive the golden age of travel. Of course, perhaps overlooking all of the shortcomings of modern air travel, overflowing airports and flight delays. And of course, one carrier turning this whole thing on its head. You've guessed it, cheap and cheerless Ryanair. They are known for trolling their own customers, and they say we reserve the right to refuse service to anyone wearing jeans on a 4-hour flight. So there you have it. Sean Duffy, the US Transport Secretary, in his attempts to try to get rid of PJs on planes and in airports. I think you might need some luck with that. I'm going to put a link to Lean's piece, though, in our show notes for you, and you can have a look at all of that. Right, let's think about yesterday's UK budget. Now that the markets and the public have had a bit of time to digest it, after months of speculation and a very unfortunate pre-release from the Office for Budget Responsibility yesterday, the UK Chancellor Rachel Reeves delivered one of the biggest tax-raising budgets of recent decades, driven by a freeze on income tax thresholds beyond 2028 and higher levies on areas including property, pensions, gambling and dividends. Joining me now to discuss is our UK politics reporter, James Wilcock. James, good morning. Wow, yesterday was a huge day. The budget was really aimed at two groups, at markets and at Labour MPs. That tells you a lot about the current state of this government, doesn't it?
It does. I mean, look, there were a lot of taxes. There was a whole laundry list, which adds up to £26 billion. And that you've got to put that £26 billion in context, Caroline. Last year, when Rachel Reeves came into government, she put up taxes by £40 billion, roughly. And that was one of the biggest tax-rising budgets on record in modern British politics. To come back again after promising she would not do this is a momentous moment for her career as the Chancellor of the first Labour government in 15 years. Why has she done that? And to this, the story is about one surprise and two winners. The surprise is that we were all expecting a massive downgrade in her fiscal headroom due to the Office for Budget Responsibility's forecast. Now, although they brought down the growth downgrade because of inflation and people being pulled into higher tax brackets, they actually forecast that Rachel Reeves would have far more money to play with. So where did that money go? And these are the two winners. first, it went to the markets, arguably. Reeves put in money into her fiscal buffer, so she now has far more room to protect against gilt market swings, and markets reacted quite positively to that yesterday. And then it went to welfare's budget, the scrapping of the two-child benefit cap, which broadly, most MPs I was talking to, and also our rest of our politics team, went that was something they could back, that they could sell on the doorstep, and they could say it's a progressive government.
Yeah. And so to the reaction, and I'll just quote as one example, the Daily Mail's front page this morning: spiteful raids on strivers to lavish billions on Benefit Street. I mean, it's only a kind of straw poll view, isn't it? What has been the reaction? I
mean, look, there was this kind of initial shock at a major leak from the Office of Budget Responsibility when they posted their entire economic analysis about half an hour before Reeves spoke. And that kind of honestly had a lot of the journalists reeling. But now things are settling. Like you said, you talked about the Mail, the FT talks about smashing tax records, the Times, high welfare, high tax. The I quotes the IFS's summary of the budget saying it's spend now, pay later. Budget shambles, your Mail line there. There is this broad acceptance that the way this has settled amongst sort of at least the press is people are going to be paying more and that money is going to be going towards welfare. I think the question for the Rachel Reeves is now, how does she then sell that message to the public, as the rest of the Labour government do, of this is going to generate a better society, better people, better public services? That will be sort of in the weeks to come how the political reaction shapes out. I think it's worth also pointing to, we are yet to see really the full sort of market reaction as this budget gets digested. That's what we'll be looking for today and in sort of the coming weeks.
Yes, and the issue, as you've sort of alluded to, is that a lot of the measures are also backloaded to the end of the Parliament. That could present some risks.
Yeah, this isn't your first budget, I see, Caroline. Look, this is a trick that Jeremy Hunt used towards the end of the Conservative government and is a bit sneaky. It's politically expedient because what you do is you front load all the spending into now, so now is the good times, and you say the cuts will come 4 or 5 years down the road. The problem is, politically, this year, this Labour government failed to get through key cuts to welfare, and so their question for their market and economic credibility is, can they change that narrative and get those cuts in? Or, and this is where the risks start to come in for them, do the market judge that these cuts are never coming? They'll always be 5 years into the future. And that's where things start to get a bit jittery for the government. And just one final note, as well as the cuts, one other thing that came out in sort of the back pages of this budget and the OBR analysis is welfare spending, pension spending. Some of these big ticket items are forecast to spiral out in the 4 or 5 year forecast mark, with welfare spending is already 16 billion higher than forecast in March due to higher benefit caseload. So that is also some real headaches that we're starting to see in the looming horizon.
Yeah, absolutely. And I also know on the markets that Morgan Stanley's closed their bullish recommendation on sterling, as also markets are kind of thinking about the impact on the currency and on bonds here in the UK. James, thank you so much for being with me this morning. That is our UK politics reporter, James Wilcock. Stay with us. More from Bloomberg Daybreak Europe coming up after this. Now to another story. Private equity firms have been snapping up life insurers in the US, but in Europe they're running into pushback after failures like Italy's Eurovita, which raised fears about risky investments and also long-term stability. Our European asset management reporter, Leo Kensherper, has been looking into this and joins me now. Leo, good morning. Why is Europe so wary of private equity firms buying life insurers? What's the issue here?
Yes, good morning, Caroline. So as you mentioned, the big wake-up call for regulators in Europe really was Eurovita, Italian life insurer with 350,000 customers that went into administration 2 years ago. And what happened there is that a lot of clients surrendered their policies after interest rates had risen and made other savings products look more attractive, really. And that led to a capital shortfall, which Eurovita's owner at the time, the British buyout firm Cinven, wasn't immediately prepared to plug. And so Eurovita's customers effectively had to be bailed out by a group of insurers and banks. And regulators' key concern now is that there's essentially a perceived mismatch of a PE fund that owns a life insurer. PE funds need to return capital to investors as soon as after 5 years, and life insurance policies, on the other hand, run for 20, 30 years, and they just need more long-term backing. So there's this mismatch there that regulators are worried about.
Okay, that's interesting. So what are the differences then between Europe and the US? Because in the US, private equity controlling life insurance is actually a big theme.
Yes, exactly. So globally, PE control of life insurance assets has risen by more than $1 trillion from very low levels in 2009. And most of that has actually, as you said, happened in the US. Another key concern that really came to light this year is the possibility of ratings shopping. Insurers getting easy credit ratings for assets, which of course has the potential to hide poor quality. And this has reminded some very prominent voices, including the UBS chair, Colm Kelleher, of the run-up to the great financial crisis, actually. So it's really important to point out, though, that in Europe, insurers actually get very little capital benefit from investing in securitized assets. And they can also use their own internal ratings, which have been approved by regulators. So there's just less of an incentive here to go ratings shopping.
I see. And so in terms of what this means for the cost and reliability of a life insurance products, I think that's also might be interesting to listeners.
It is a good question. I think generally, it's fair to assume that actually competition is good for pricing, at least. But when it comes to reliability, there is another key concern regulators here have. And it's really prominent in the US, where essentially insurers use offshore reinsurance. They offload parts of the risks they take to more lightly regulated jurisdictions like Bermuda. And the Bank of England this week actually published results of a stress test where they tested UK insurers exactly for that reason.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.